All right, folks, welcome back to another episode of Crypto Price Action here with the Bitcoin Think Tank Group. Okay, so the last few days have been painful. I have not gotten any angry calls from anybody, so I'm kind of happy that way. But what's been happening is an aggressive sell off. So let's see what's going to happen next, or at least let's try and predict which way the market might go. No one knows for sure, but let's try and arrive at some educated guesstimates. All right. So last time we were here, we drew a trend line down this way, and we said this line was acting as resistance going down, and then it started acting as support, and that still holds true. There's nothing that's changed there. Okay. Now the question is it going to continue going down this way, or are we going to make a recovery going back up? So first things to look at is the support levels. The most important support level that I felt comfortable at was this level, because of the price just tend to have some kind of a reaction at this level, which was 40,000, and we broke below that yesterday, and we're continuing to trade below that. Okay, so what is the next level that we can expect something? So that this area all the way down to 29,000, this entire area has a lot of price action in the past, which means this block has to provide quite some resistance. So breaking down from here is not easy, but it can happen with the Fed Reserve increasing interest rates and such. With all the macro conditions, there could be additional sell pressure, and there might be other factors playing into the sell pressure. We'll talk about that. So there's a good chance of it breaking down, maybe past this weekend, during the weekend, or there's enough support here and the buyers come back and we are able to recover. All right, so let's take a look at a few other things before we jump to some other charts. The other thing I want to talk about is the exponential moving average. Let me get rid of all the drawings. So this pink line here that you see is a 200-day exponential moving average. This is a daily chart, of course. And all these other ribbons you see here are other moving averages of 20-day, 25-day, 30-day, etc. All these shorter term moving averages have crossed below the 200-day moving average, which is a pretty bearish sign. And the last time that happened was right here. So we moved, all the EMAs moved below 200-day exponential moving average, and it kind of stayed there for quite some period of time. So how long did it stay there after all the ribbons had moved, and then the price actually increased, or the EMA ribbons came above? So it's about 44 days in total. So if we say something similar is going to play out, so all the EMA ribbons or all the EMA lines move below the 200 right there, and if we say 44 days, that puts us in the 22nd of February. And so the pattern might play out something like that, and we move back up again. Like I said last time, I don't see any other way other than June, July timeframe for things to go to an all-time high type scenario. But we've got a lot of headwinds to weather before we can even talk about all-time highs. There's so much. Everything that acted as support in the past is going to become resistance. So just something to keep in mind, that going up is not going to be easy as we move up this chart. And everything that was support is going to continue to become resistance, and we're going to find resistance in all these levels. So it's going to be a pretty choppy ride up. So let's see what else we can glean from here. Okay, so the bottom line is, looks like there's enough support in this level. This band here and we should be able to kind of just hang around here hopefully and recover. If there's additional news that's bearish, then we could break down. Okay, if we do break down, what is the next price level? Again, I'm not saying we are going to break down, but we have to think about all these scenarios. So $29,000 is the next real support at the end of that band. And if we don't keep that band, that was the question. Okay, I don't want to say these numbers, but the low 20s, like 22, 21, 19,000. All right, so you can be like, okay, Karthik, you're crazy. But yeah, but we just need to be prepared. If there's enough bad news, we can go down all the way to 20, at which point we can all sell our houses and buy more Bitcoin. Okay, not financial advice. Let's move on to a few other things. Okay, the advantage we have in crypto is that all the blockchains are a public blockchain, which means you can analyze what's going on in the chain. And Glassnode is one of the companies that tracks on-chain metrics. Okay, they've got all kinds of metrics and charts. For example, active addresses. This is for Bitcoin, of course. You can look at Ethereum and all that, but active addresses for Bitcoin is kind of stagnating. That's okay. But the actual number of addresses more than at least 0.01 Bitcoins, more than 0.01, that continues to go up. Which is a bullish sign, means there are more and more people getting interested in Bitcoin. Now, this company, Glassnode, actually has a YouTube channel, and I encourage you to go check that out. And recently, they did a complete review of this recent crash, or I shouldn't say crash, the pump down that we saw. So I gleaned a little bit out of it, but I encourage you to go see that video in its entirety for your own education. But the most important points were that the percentage profit and supply. So the black line is the Bitcoin price, right? And the Bitcoin price is hanging out there. The percentage supply and profit is right now at around 67%. So this is about 67%. What this means, this orange line is telling you, is that 67% of Bitcoin holders are actually in profit based on the time they bought versus now, which means 37% of them are not in profit. Okay, and these tend to be short-term holders. But why are they not in profit? Because they probably were buying on the way up, FOMOing in. So as the price crashes, comes down, these are the folks that will feel the pain the most. And that's only 37%. It could go further down as more and more sellers come and kind of lose hope and start to sell. Our price could see more downward momentum. Now, the other thing to keep in mind is we were at a similar level back in June 21, and we did bounce off of that level, and so we can hope that we will have a similar bounce off of this level, but that might just be wishful thinking. We have to see the next week or two to actually make a decision. Okay, that being said, the next point that Glassnode made was the open interest. So open interest includes derivatives, which also includes funding or margin trading. And what this shows is different exchanges and the amount of open interest for Bitcoin in each of these exchanges. So the biggest one is, of course, Binance, the one in pink right here. Right. And what this is saying is every time price fell, so this black line here, every time price fell, there was liquidation. So the amount of open interest decreased. For example, when the price fell here, late December, there was liquidation. What we are seeing now is, although the price has been on a downward trend, we're not seeing as much liquidations happening, which means there's just too much open interest still. And this this kind of liquidation is a good thing because it allows for normal price action to resume. But in our case, in this latest episode, it has not happened, which means normalcy or upward movement may not resume, again pointing to more downward pressure. Okay, and after that, they talk about how long-term holders, which is in blue, versus the short-term holders, which is in red, over the many years and months have actually exchanged hands, right? So you cannot have selling without buyers. So you can't say more people sold than bought. That does not happen. The equal number of people have to sell and buy. So when the market peaks, the long-term holders kind of take some profits, short-term holders FOMO in, so it kind of exchanges hands and goes on. And so the same thing happened recently. But there's a good chance that a lot of short-term holders are actually converting to long-term holders. So this is not the same people, right? So the short-term holders here who did not sell become long-term holder a period of time, and it just changes hands. But ultimately, the prognosis of this latest crash is as follows. So if you look at the balance on exchanges, this is all exchanges, all the crypto exchanges, and the Bitcoin balances in them dropped the last time and then increased. The last time the price went down, it dropped, which means the long-term buyers were just buying and then shoving it away into their cold storage. And as the price increased, they brought it back into they bought their coins back into the exchanges. But since then, there was a little bit of a drop, but then it's pretty much plateaued after that. And so the analysis on Glassnode is basically that the reason this is plateauing is there's a lack of demand. It's got nothing to do with the fundamentals of Bitcoin changing or anything like that. In fact, institutional investors are trading Bitcoin and everything. And so there should be more demand, but just people are sitting on the sidelines and waiting because the macro conditions don't look good. There's just no demand. And if you look at the volume in our Bitcoin, let me get rid of all the scribbling. If you look at the volume and the charts, it's kind of anemic. It's not even as good as the volume that we saw here. You see the amount of volume here versus here. So, and it's just the volume has been pretty anemic. And so there's just a lack of demand, which means when some short-term holders decide to sell, which includes institutional investors or short-term holders, just remember that all these folks with hundreds of billions of dollars to play with in the crypto market are now institutional investors. The market has fundamentally changed. And so when they decide to go take profit and put money on the sidelines, it's going to push the price down, and there might be more weakness to come. All right. So, but the fundamentals have not changed. The problem right now is that the institutional investors treat Bitcoin like a high risk tech stock and not the future of money. Most of us hodlers think of Bitcoin as a revolutionary thing that's going to change the world. All that is still true, but these short-term institutional investors and even retail short-term investors don't think that way. They buy it like a high-risk tech stock, and they get out when they are scared. And when everybody's scared is the time we should buy. Not financial advice. But I'm also sitting on the sidelines at this point. Okay, let's quickly look at Ethereum before I let you guys go. Let's look at the altcoins. Let's remove the EMA ribbons. Okay, so Ethereum. The support that was here has been broken. And if you zoom out and look at this, we are entering another block where there was some support. So hopefully Ethereum does not fall much lower than this level, which is around 2,222, something to that effect. Actually, VPVR might be a better way to look at this. Let's reduce the visible range, get rid of the scribbling. And yeah, so you can see in the VPVR, there was a hole right there. This is basically volume by price, right? So there's just nothing to support Ethereum in this range, so it fell right through. But there is like peaks of activity in these levels all the way down to here. So we should have a slower fall. We should not be falling as much, which is very different from Solana. Let's look at Solana real quick. And again, the support that was here broken through. There's just nothing. There's just no support anymore after this. So this entire region, when we shot up in price with Solana, there was really no price action. There were no buyers or sellers. There's momentum taking it up. So on the way down, there's a good chance you zip down as well until you kind of reach this level, which might be around $84, which is painful to hear. But that's kind of what might happen even over the weekend. Over the weekend, things tend to be extremely weak because there's just retail investors, all the weak hands getting scared and running away happens over the weekend with no institutional investors to buy it up. And so we can see quite a bit of downside over the weekend, but who knows, it might actually make a U-turn. We don't know, but as it stands now, even if you look at the VPVR, let's see what's happening with VPVR. Yeah, so there's a big hole in this price range between where it's at, where it was between 134 and $73. There's just nothing to catch it. Okay, so Solana looks even more in a precarious situation than Ethereum. Okay, with that, I'll let you guys go. And I do have a couple of other videos to make more on the fundamentals of Bitcoin, which has not changed and stronger than ever. Two problems to summarize. One is the lack of demand, just people sitting on sidelines and not knowing what to do. Macro conditions not being favorable with all this money that was supplied into the economy. People are going and investing in Bitcoin and such. Does not exist anymore. And then thirdly, the market participants have changed. It's not the people that believe in Bitcoin as the future. It's the institutional investors who tend to be short-term holders. With that, thank you very much, and I will see you guys next time.